Hello and welcome to Pro Trader Strategies Market Commentary for Monday, December the 24th, Christmas Eve. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on. It being a Monday, light on volume for sure, and light on economic data. As a matter of fact, we really aren't going to get a whole lot of economic data all this week. Across the pond, Europe is going to be closed until Wednesday. They get Monday, Tuesday, and Wednesday as a bank holiday for the most part. Here in the United States, tomorrow is our only bank holiday. But across the board, that's going to really lighten up volumes and really make it difficult for the market to make a discernible direction. Light volume, we could go in either direction today. My guess is that it's going to be a push to the upside late in the day, just with the lack of volume and probably only the retail investors in playing around today. All right, so that was crude oil that we, I guess, aren't going to look at. And give me a second to pull that back up here. We got crude oil moving lower today, below that 45 handle into the 40s, making it very cheap for all of us retailers to be able to go out and travel during the holiday season at a very cheap rate, because gas in the Midwest, I believe, is even below $2 in some places. Here in Arizona, we're still hovering just above $2, but very cheap for filling up a full tank of gas for sure. Across the board, that would be good. Remember, that's going to be less of a tax on the consumer at this point, and they will have that extra money to spend elsewhere and hopefully create a little bit more velocity of money right here in or around the holiday season. So near the lows of the day in crude oil, doesn't look like there's a whole lot holding that market up. Gold is pushing higher today as levers and pulleys are acting pretty normal. As equities are off, we should see a flight to safety in gold, and that's what we're really seeing right now, trading almost 1270. And then we've got the bonds moving higher today, again, just slightly. I think it's going to want to roll over back to where the point of control is. We're very close to that right now, but again, flight to safety if nothing else for the broader markets that have the levers and pulleys working the way we would expect. VIX slightly moving higher up into those 30s. The market's really starting to get nervous as a retail investor, and people are starting to buy puts. And I even talked about this on Twitter last week, that buying puts at this stage in the game is not a good idea, because if you are a longer term investor, you are buying very high implied volatility right now in all of your underlyings. That means you're paying up for premium, and if that premium comes out, even if you're directionally right, you're still liable to lose a lot of money on that premium as the premium comes out of it. Just the volatility alone, premium coming out of it, will really hurt. So putting on types of protection like buying puts is not going to work in this kind of environment to really protect you very well. But you can see that coming up in the VIX, where we're seeing that spike, where volatility is continuing to expand as people are buying protection. That is not going to be something that will be a saving grace down the road if you're using this as a long-term hedge for your portfolio. All right, the Dow Jones off 270 some odd points, gapping down a little bit. You know, a slam down again today, and then a rally up. We need to see that late day strength that we're just not seeing. I've talked about this for a couple of weeks now, that late in the day we're seeing heavy selling, which is not boding well for any type of bottom at all. And we saw that again on Friday. Today we got the slam down. We're trying to claw a little bit of that back right now, but we really need to set it's to end in the upper probably third or quarter of that candle in order for it to really start looking like we've found a bottom. I haven't seen that kind of action happen late in the day. All I'm seeing late in the day is some more panic selling as the retail investors have the MOCs on, just hit the market at the end of the day to get me out. That's what's part of that as well. So let's look at the NASDAQ. We can see the NASDAQ off quite a bit as well. Again, would need to see that settlement in the upper quarter at least in order for this to look like it's going to start making a bit of a bottom. A lot of people may discount today's action as well because it's pretty much retail investors, as the institutional investors are going to be kind of locking up their books here for the end of the year, that as they've kind of set aside the trades that they're going to keep going into 2019 and pretty much covered the ones that they're going to rotate out of. So that all kind of getting settled up this week as well. The market could get pushed in either direction as these guys try to shore up and hedge up their portfolios for year-end, the year-end fun. All right, so we've got the NASDAQ giving back a bit more ground as well. E-mini S&P is down on the day. They're all testing their Fibonacci's, though. That's a good thing. It just is so overextended at this point, but that's what happens when the markets get into these kind of rotations and this kind of environment, is that the panic starts setting in, and that becomes more of a market mover than any of the other levers and pulleys going on. And I think that that's what we're starting to see. It's not quite capitulation yet, but I think that we are very close to that as we continue to make these massive sell-offs. I mean, as a matter of fact, you can see this is feeling very much like a crash at this point. I haven't added anything, you guys, to my portfolio. I did finally take off eBay Friday, which makes me completely flat. I ended up getting out of that for a loss. I think I averaged that in where I was long at about 32. I sold those at 26, so it was not a very good winner. 26 something, I think it was 26.50 or something. So completely out, completely flat in my entire portfolio. This is the daily chart of the mini S&Ps, as you can see here. Overnight inventory just kind of flat coming into today. No economic data really to speak of to get this market moving, but the bearishness and the bearish trend we're seeing is kind of creating this cycle where even the guys with a real strong intestinal fortitude that didn't get out earlier, think that they are correct and are riding this into the dirt, are starting to feel the pain and probably really considering getting out at this point, which is when you really see that next leg down and find opportunity, obviously. But I haven't added anything. Like I said, I took off eBay, excuse me, on Friday. Let me just pull up an eBay chart for you because I exited that on Friday, so I want to make sure we go over it. And as you can see, I probably covered it pretty close to the lows. I think I covered it at 26.50, 26.40, something right around in there. It's trading right about where I got out. So it did come down, test this Fibonacci, but at the end of the day, I didn't want anything in my portfolio completely flat. So I finally decided to get out of that. Probably the wrong day, but hindsight is always 20/20. And that's about it for today. Hope everybody has a great Christmas, and we'll get back to it later on this week. Wednesday, I'll be back at it, and we'll talk more about the markets and see if there's any opportunities. Because right now, I'm just not seeing any other opportunity other than the downside. And because we've gotten to those extremes, I don't want to be going and taking advantage of high implied volatility by selling calls, because we might snap back, and it might snap back very quickly. So my idea here is that I'm waiting for a little bit of a bottom, get a bit of a bounce, and that's when I'm going to start selling those puts again. All right, and that's all I got for you guys. Have a great day, and if you can't take that, take it easy.